Hello and welcome to Panther Financial Services. This is Pranav Patil. Today we will discuss what is hedge fund or what are the major seven strategies used by hedge fund managers. So before starting this entire discussion, I'll share few statistics with you. If you look at the top private hedge fund, the top is I'm talking about purely AUM under hedge fund. Basically, the fund hedge fund who has a more assets under management. So who has a big cash or the fund in the hand. So DE Shaw is the top hedge fund who has almost $100 billion in hand. Of course, in terms of securities as well. 100 billion one firm. Just imagine. Now, if you look at the return wise or the performance wise, there are, I will discuss only top two numbers. One is Peconic Partners, who has provided 255% returns in the last 3 years. So, average, if you talk about 55 plus percent returns every year they are provided, which has almost $2 billion in hand in terms of securities also. So he's the top performer in the hedge fund industry. I'm talking about the global hedge fund. Whereas the second number is SRS Capital, SRS Investment Management, who has almost $9.5 billion in their fund. The performance of this fund, they have provided 210% return in the last 3 years. So again, almost very big quantum. Just imagine the kind of returns they have provided. If you look at the SRS investment management firm, they have a $9.5 billion of worth of securities or the fund value. The specifically, I'm mentioning this name because there is some reason. If you look at this fund securities as well, there is a security called as Avis Budget Group stock basically, who holds 60% value of this fund. Just imagine almost a $10 billion, which is being allocated, 60% of this has been allocated in a one security only. So what you understand from this? So hedge fund is like a fund only, but they are managed actively. You in the last one of video we discussed mutual fund as well. When it comes to the mutual fund, there is a regulation come, like if it is a large cap, you have to invest into large cap only. If it is a mid cap, you have to invest into mid caps only. Again, there is a criteria comes, okay, you can't invest more than 10% in a particular security or 5% in a particular security. These kind of regulation or rules comes in the mutual fund industry, but when it comes to the hedge fund, there are no rules as such. Of course, market wide limit is there, which is everywhere. Now, the we in the hedge fund industry, there are no such kind of rules. Now we will understand why, from where this money comes. I mentioned DE Shaw, who has almost $100 billion. Then SRS Investment Management, who has almost $10 billion, and the performance like 200% return in the last 200% plus returns in the last 3 years. And out of that 10 billion, almost 6 billion is invested into, or the valuation of that fund is 60% is into one security only, one stock only. So which are those people who invest? Basically, those who have a very good amount of in assets with them, they invest this kind of money. So something called as a AIS, you must have heard about this, alternate investment management services. So these are the people who also invest with these fund managers, depending on their philosophy or their strategies. We will discuss the strategies as well down the this video. So if you look at the top AIS, I'll mention three names. One is BlackRock, second is Vanguard, and third one is Street Street Global Advisors. So the BlackRock has a $9.5 trillion assets under management. Just imagine, if you look at the global GDP, is almost a $95 trillion global GDP. 10% of that $9.5 trillion, which only one firm has, that is a BlackRock. These people also invest via hedge fund as well. Now, I'm not saying the full entire exposure they take it, but they do invest larger amount via hedge funds as well. If you look at the Vanguard, also one of the top three basically names I have mentioned. Straits is also one of the top three names in the AIS funds. So this is about the statistics. Now let's come to the point. Say, what is a hedge fund? I'll make it in a simple manner. Basically, the fund who doesn't, the fund basically, it's the same fund like, some lot of people comes put their, it is a kitty, and people come and put their kitty into uh, money into that kitty, and one person invest that money into different securities. That is called as a hedge fund in a simple language. But there are no rules and regulation like you find it in a mutual fund. They can't go into public and they can't take it like 1,000 or 10,000 or lakh rupees or 2 lakh rupees every month kind of SIP. No, it comes with a lump sum. The entire fund you know works on a performance base. The kind of charges you find in the mutual fund, and the kind of charges or the fees in hedge fund is total different. So basically, it is a general fund only for an investment perspective. Hedge fund is like a fund. They charge a very high amount of fees. They are purely performance based. The kind of performance they show, accordingly they get the chunk as well for an investment. There are no restrictions while investing into the securities. Of course, there are market wide limit is across anywhere. If you work into stock market, in any stock market, there is a market wide limit that comes, but that is very high. And these funds are not open to all. Basically, only ultra HNIs. If you talk about the in India, we don't have that much big culture as such for a hedge fund. But of course, there are certain hedge funds in India who takes like a 1 crore tick size or 5 crore tick size as well. Like how you have in a PMS industry, there is a 50 lakh rupees tick size as per SEBI norms. So there is no proper tick size in the hedge fund, but yes, certain funds take like a 5 crore 1 crore as well. In India, I'm talking about the global level, like 100 million or 500 million, that kind of money they get it. The entire funding they get, it total depend on the performance, the way they show it. Now, how exactly they work, what kind of strategies they use it compared to what the other mutual fund or anything. I'll discuss main seven strategies. One is a counter strategy. Counter strategy is nothing but you sell into one stock and you buy one stock. Suppose if I'm long on the HDFC bank, or I'll sell any other bank or any other stock. Now that happens via derivatives, also via cash as well. If you don't have a shares, you take the shares from a market. There are people who give the shares as well. That is called as a lending, basically securities lending. You can take that shares on a loan, or on the short term perspective, you can sell those shares in the market, and acquire, after some time you can buy those shares and you can give the delivery the person whom you have taken those shares. So this is the first strategy, is the counter strategy. You take a one long and you do a short in the another stock. So if the one stock goes up, and if the another stock goes up, or the market goes up, if both the stock goes up, there is a hedge kind of something happens. So first is a counter strategy. Second is a one-sided strategy. Like you are purely short selling fund, short selling hedge fund. So whenever you see a opportunity in a particular securities, you do a short and you make a money, maybe in the index as well, or maybe in the stocks as well. This is the second strategy, which is called as a one-sided strategy. Like you go one-sided, only short oriented fund or long oriented fund. Now, this third one is an active investment strategy. What does it mean? Basically, you try to find out the good companies, you try to connect with them, you meet the board of directors, you meet the people in that company, you buy the very good amount of holdings into that company, you give them a capital to develop their business, and you hold it purely long term perspective. actively you find the companies, you invest into them, and you ensure the valuation goes up. You give them a good cash if they required, whatever the resources they required. This is called as an active investment management firm. The third one is a philosophy oriented fourth one is a philosophy oriented, like most of I'm just giving an example. Muslim community doesn't believe on the interest, so there are certain hedge fund who doesn't invest into the bonds where they get a return, where they get a interest. So these are the philosophy. We don't want the interest. Accordingly, they invested. Or there are certain funds who doesn't wanted to invest into tobacco or liquor industry. They don't invest into that perspective. So philosophy. You have your own principles, and accordingly, you create the fund and you invest it. This is called as a philosophy oriented. Then the event or global macro strategy. So you see a particular event. Let's say if there is a Indian elections are happening, or there is a RBI meet, or I'm talking the big global events, like you'll find the US elections as well. These are the big events. So accordingly, you take a positions in the market and you make a money. That's called as a event oriented or global macro. It is not a one country event. Maybe you are into the global level. So this is also one of the strategy used by the hedge fund managers. Now the next is a funds of funds. So if there is a fund, suppose, just an example, I have already have a good funds, and there is another hedge fund who is investing or who is doing performing well. So what I do, I invest into that fund. Funds of funds. The fund, one fund is investing into another fund, is called as a funds of funds investment strategy. Then the next is quant based or distressed asset based. Basically, there are a number of people, if the companies goes into insolvency, or company has a problem with the debt, so, and the company is not doing performing well, so you try to buy those companies, you try to develop, and you make a money out of it. So these are the simple 7 strategies we have discussed into this video. The entire agenda for discussing this hedge fund today is the kind of wealth they create and the kind of security they provide. It's phenomenally different. My point is that there are a lot of people, when they talk about the portfolio management services, they tell you, okay, invest into 50 securities, 100 securities. It hardly works. Even if you take a Warren Buffett, top 5 securities has given the 90%, 80 to 90% returns of the fund. So even in your portfolio, you can make a portfolio with the 1 or 2 securities as well. You need to have a very great eye to watch you find that security. And this hedge fund or these investment managers actually do make those companies. I always mention that, okay, you send a good vibration, you send a good positive vibration, have a patience. So these fund managers actually give the good amount of investment cash to particular company, their respective companies, and they send a good vibration. They have a patience. Basically, they see in a person who's driving it, and accordingly they invest and they make a good amount of money. So point here I'm trying to make it, if you have a good 1 or 2 securities also, you can make a crazy return. I have given the SRS investment management example, who's a second performer. I'm talking about in the global, entire global, who has given 200 plus returns in the last 3 years. And the fund size of this management the hedge fund is almost a $10 billion, $9.5 billion. Out of that, 60% is invested into one securities. This is example I shared with you. Hope you have enjoyed this discussion. Thank you for your time. Have a great day ahead. Thank you.